Good. Beautiful. Very nice. Audio good. No video. Let's see if I could fix that, David D. I'm just going to restart my video. Should be up now. Pen Tasty. Electronic cigarette. You have both. Video up. Very cool. We're going to discuss something very important today as we are going to head into the close on a quadruple witching Friday to follow through with the Greek elections on Sunday. First of all, Dan, it was you who told me I wouldn't get any women with it. So to come back and ask me where it is, it's washed down the sink alongside with some shaving cream where it belongs. Okay, DT? All right, Dan? Welcome back to Shine's Room, everyone. Very interesting as we are on a quadruple witching Friday. Professional traders understand that price action is never black and white, no matter how many details we try to analyze. Professional traders don't pay attention to the little bobbly talking heads on television or gurus on the internet. They know the answers they need are contained within the candlestick, the technical analysis, and the breakdown of their charting. Remember that reality plays a very little role in reading price action. The only important thing to look for is market sentiment. If the price is falling, this might not only just be one thing. It's not so black and white. If the price If a price is falling in a stock, this may be a lack of buyers or strength in the sellers. On the flip side, if a price is making new higher highs, we know that this may be caused by extreme buying pressure, or most oftenly, it's the lack of strong sellers at these levels. Remember to take a step back when you find yourself at the highs or lows of a trading range and ask yourself the following: what is the market sentiment telling me right here? So we're going to look at the Citigroup. Nauseating to see these calls today, huh? We called Citigroup on the bottom. We stepped into that calls at the perfect time. Perfect timing, and I threw it away too early. We're looking at the June 27 calls, was able to scoop them up for 26 cents. They hit a low of 20 cents today, and 25 cents today, and then they just rallied from there. I caught a quick 70% of my money or so, and I smiled and walked away, leaving another 230% on the table. So that's just one with Citigroup. Beautiful bounce there. And what was telling me to go long Citigroup here? I will show you. I will show you just exactly what we were talking about earlier on. We were looking at some of the other big banks, especially ones in the news as of recently, like JP Morgan. And what you did see was JP Morgan wasn't making fresh day lows, while Citigroup just absolutely collapsed from a technical standpoint. Now, there was a good reasoning for this. We mentioned that not only is today a quadruple witching Friday, this is the zenith point of Citigroup today, where it tries to make a resolution. So to see that resolution coming into the downside showed me that it was the technical relevancy of what was happening on the daily chart that really separated Citigroup from the rest of the pack. So I saw JP Morgan still going up. Just like I was talking about, I took a step back. I evaluated. Remember to take a step back when you find yourself at the highs or the lows of a trading range and ask yourself, what is the market sentiment telling me right here? JP Morgan was showing me bullish sentiment, and I just jumped right into that Citigroup. You liked me more when I looked a little sleazy? Dave's, I guess, more into those sleazy guys. So am I. What can I say? Here I am with a shirt and tie, right? Talking to you guys. So, very interesting day here for Citigroup. Let's just go on. We're going to talk about Greece really quickly. So, gold and central banks are going to be my main focus. Obviously, you see me with banks and gold and the FXC on the chart of what I am going to be touching into this weekend. And that's how I am playing the Greek elections right now. There's been some speculation recently that should Greek anti-bailout parties win on Sunday's election and Greece ultimately leaves the euro, that the Greek central bank might be forced to sell its gold supplies to raise cash. That is one idea that sounds plausible at first to make up for your debt, but let me tell you that is simply not going to happen at all. Selling gold to fund government borrowing is specifically prohibited by the Maastricht Treaty that created the European Union in the first place. Secondary, Greece signed the central bank gold agreement, which restricts how much gold can be sold at any one time by any of the central banks signed for this agreement. You have to realize, I did a little due diligence here. Greece right now has 111 tons of gold. You know how heavy that is? Who wants to guess? In terms of the biggest central bank holders in gold in metric tons, what number do you think Greece is on the chart? 1, 2, 3, 4, 10, 50, 100, 20, 30. What do you guys think? Eh, near the bottom? 6 or 7? 60? Guesses, Dan? James guesses 6 or 7. Greek is 32nd largest holder of gold out of all the biggest central bank holders. Agreements aside, it's not a lot of money. At the current price of a little over $1,600 an ounce, 111 tons is approximately $6.4 billion. So that's not a lot of money for a country with $400 billion in sovereign debt, and not to mention, it's not even a dent in the issue, despite the fact that it's illegal for them to do it based on the central bank gold agreement. So why am I looking at gold bearishly in that case? We already know that it's illegal for Greece to sell their gold in order to help pay this $400 billion in sovereign debt. You know what's going to happen with this $400 billion in sovereign debt? You know what they're going to do with that? Here's my opinion of what they're going to do with that. You're going to be walking around Athens, and you're going to have a little ticker up there walking around, and you're going to see 400 billion. You're going to just keep seeing the number go up like you do in New York on that huge, ridiculous number. You thought it was somebody's like cell phone number overlapped with like their phone number and their neighbor's phone numbers as well, and you just see like this tremendous number next to each other. I think that's what they're going to do with their $400 billion in debt, and that's the same thing the United States has been doing for many, many years. So, not allowed to sell the gold. First thing I'm looking for, we're going to talk about the FXC June 22nd puts right now. And these are a little bit pricey. And just keep in mind, I'm not looking at the calls or puts that are expiring today. These are the June 22nds. And you see these 126 puts, you know, pretty low volume at the moment, only 80 contracts traded hand. But I really like this spot in FXC for 126 puts, and I want to describe it with the following chart right here. Beautiful move here in FXC. You see a bit of a rising wedge coming. That's a bearish sign. That is a bear flag formation with a rising wedge. I think that potentially, from a technician standpoint, this is a great play. Now, you want to add the fact that you're going to get a catalyst in Greece, and that's why I am putting a little over $5,000 into this idea alone, the FXC, because I do feel we do pull down in the markets, and I do feel that no matter what happens, a likely scenario for at least fear on the table still lies in Greece. And let me explain one further step of conviction for me here. Yesterday, you remember the banks did come out and all of a sudden say to everybody, oh yeah, we'll be working on a bailout package after the elections. You know what that's saying? That's the United States trying to hint that, oh my God, this could be terrible. And if they go down, our economy is going to be hurt to the point where it pays to save money and bail them out. That's what the United States of America, that's how I read. That was my personal due diligence and interpretations of what the banks tried to do yesterday. If the banks are saying, if the United States of America is saying, oh my God, oh crap, I think the FXC is in trouble. I think the euro is in trouble. Do I personally think Greece will leave the eurozone? No, I do not. I am playing off the potential fear that they may leave the eurozone, and that is why I'm taking these FXC puts. Not because I think it'll happen. I think the exact opposite. I think they'll be still part of the eurozone based on some of these bailouts, but with fear on the table and no response from the country based on what the United States tried to pull together to offer, I find this very scary, and with fear comes volatility, and I'm looking for a move down there in the euro by Monday. And let's go on with the GLD. Now, very interesting here. We'll get into those questions soon of why I attack certain strike prices here. We'll look at the GLD, June 22nd, 158 puts. Now, this was also a very interesting idea for me here. And, of course, you're looking at the June 22nds. Again, not the ones that are expiring today. You're looking at the ones that are expiring next week. And this I really loved as well, and I was able to pick up a couple hundred of these. But looking at this GLD, these June 158 puts, why I love these puts is because, look, just because they can't sell it, that doesn't mean that the price of gold will not look bearish. If you take a look at the GLD, and what I'm going to do with this GLD is I'm going to just overlap it with FXC. And I'm going to make FXC yellow and blue. And you could just see the obvious chart correlation. It's readily apparent that not all the time, it's not 100% correlated, but more often than not, there is levels on the, GLD and FXC do follow each other. And given the fact that GLD touched descending channel resistance perfectly today, I have not only technical conviction behind this play, but now I think that if FXC is going down, that GLD will be pulled down. Those are moons, those are planets aligning for me, ladies and gentlemen, and that's why I stepped in those GLD puts right there. Now you're going to see something very interesting that might confuse you on your screen. Right now you see me holding the June 22nd $30 calls and the June 22nd JP Morgan $33 puts. Why am I buying calls in one bank and why am I buying puts in another? And you might ask yourself, is because with all the banks and the banks being a big part of this news in Greece, I think there's further volatility ahead. I chose Citigroup for the call side for the simple reason where I am hoping that the banks are going to gap up or gap down large on Monday. If any one of those two things happen, I stand to profit even if these other cheap calls don't pan out. You're going to take a look at these calls right now. Again, very cheap calls. Not really afraid of one of them being worthless and the other being, worth more. Who knows what this volatility may potentially or may not potentially bring. Just going to look at those $30 calls right now. And you could just see them trading 12 by 13 cents, very cheap call. And of course the JP Morgan put, which I want to explain why I chose JP Morgan for the put side right here. You could just see real quick. Rising wedge written all over its face. This is a bearish rising wedge. I think this one is setting up more bearish from a technical standpoint than some of the other banks at the moment. Again, any news, bullish news from Greece can easily spike this chart up through the roof, and any bad news from Greece could easily spike it down. I am leaning towards a bearish open on Monday. I am leaning towards a big gap down on Monday. I know my risk rewards if I'm wrong. I think you're going to go big one way or another. Probably the worst thing for me to happen is if we open up like near flat, up or down a quarter on the SPYs or up and down a nickel or a dime on the Qs. That would probably be the worst case scenario. So what I am ultimately betting on is I am betting on also the following things to happen. I'm betting on Tsipras to win the election. That is, we'll call, because it's really nothing less than this. I obviously have no idea who's going to win, but I did my homework and this is what I think. So here's Melnick's predictions for Greece. Number 1, Tsipras wins the election. So the leftists win. And we know Tsipras, even though I do believe he will sign for a bailout package for his country after he wins, has also shown signs in political campaigns that he's anti-bailout. And we know Tsipras is, and I'm going to put it in quotations because everything is a bluff with these people. Are you kidding me? I'm not, I wasn't born yesterday. So I do think that he has at least portrayed to the media that he is anti-bailout. Syriza, that's right. Those are the leftists. And I do feel that even though I feel the fact that he's anti-bailout, when he wins the election, that the first interpretation is going to be fear that he might leave the Eurozone. And that's exactly why I'm attacking the markets like this. Again, I am betting for a big gap down on Monday. I know a lot of the blind bulls out there are not happy to hear something like that. Let's take a look at the triple Qs here real quickly. Let's talk about both case scenarios. You're still within a descending channel. Descending descending channels are meant to break. Do I think this descending channel resistance line will break in the future for the triple Qs? To me, it's inevitable. The question is when. How far do we go down? How far does this line trail off before you come up and try to break it? You're resting right on a descending channel resistance line. That's conviction number one. You're right inside a bearish channel right now. That's conviction number two. What more do you want? You've been having these large fear moves. Fear has been playing into everything. Remember a few months ago where fear didn't play any factor in anything? People just buy things and, we knew what was out there on the table and we didn't care. We just kept buying and buying and buying and buying and buying. Well, guess what? I think this is where we sell off. I think looking at some of these setups right now, just from a strictly technical standpoint right now, you do see like a rising wedge right there on JP Morgan. That is a very important thing to note. Can it break out to the upside? Sure. I could see JP Morgan breaking this formation and getting to 36.98, which is why exactly I attacked the cheapest of the JP Morgan puts, so I could have a lot of them. And not only that, if I do get a big move, I stand to hugely capitalize on them. So that is how I'm attacking it right now. I'm not done completing some of the positions at the moment, but I have opened up all 4 of those trades, and I plan on adding to them throughout the day, even if I get a worse average price or a better average price, just to get to a position and a dollar amount that I'm comfortable risking. Remember, ladies and gentlemen, if you do take equities home with you, that is to me the biggest risk into the weekend, because a big gap up or big gap down can make or break you either way. If you're able to just do it with calls and puts, that to me is the preferable risk-reward strategy, because obviously you're not going to have stop orders in your trade on Saturday or Sunday. More importantly, you're going to have to walk into a potential big gap on Monday. So, bearish move in euro and potentially gold. Not really sure about gold. It's setting up bearishly, I feel. It hit certain resistance levels today, and, I'm just looking for a potential bearish move in gold, but by the same token, a lot of these, it wouldn't surprise me to see a lot of these Greeks to put their euros into gold. So it actually might be a safe haven. I'm not exactly sure what's going to be the initial interpretation for that. So I'm going to attack those puts in GLD just slightly lighter. I'm going to attack the FXC heavier, and I want an equal dollar amount of Citigroup calls and JP Morgan puts, and in terms of dollar amount. So that is my goal with those 4 plays. I hope I helped shed some insight into some things to think about when, going home with any positions on this quadruple witching Friday. Again, you buy 100 shares of $100 stock, that stock could easily, if you have a huge gap down, God forbid, it could gap down, 15 points, and you could be down $1,500. But what you could do with that same $1,500, you could just buy a call and say, I'm going to risk $30 or $40 on one call, as opposed to saying I'm going to risk, potentially thousands of dollars. So just remember, it is a way to really manage the risk reward, and I really like attacking the market like this, especially when I'm predicting volatility to come. So if I could read into the volatility, you have to remember that all these calls and puts, there's time value on them, and there's also a volatility value, where the more volatile the names that are moving, the more valuable these calls and puts are. So I hope this really helped you guys get a better look into Friday. Happy trading, make money. If you guys have any technical questions or any questions about anything I discussed, now would be the time.